Now, those initial claims numbers have been, for the most part, going sideways. But as you can see when you look at the 4-week moving average, is the 4-week average has now risen one, two, and the third print always has an interesting reaction historically speaking. The unemployment claims rising in a third print on a 4-week average kind of confirms an uptrend. And so as we're going into our morning, we're taking notes here of where the probability for the Fed fund futures were in relation to the next rate cut. And our high this week has been in the 51s. And since we had the 51s, they've actually been declining. The probability has gone from 51 to 50 to 49 and now is in a 48. So despite the unemployment claims rising, the probability for the rate cut is not increasing. And the probability increasing is associated with the markets going higher. And the probability decreasing is normally associated with the markets moving lower. So it's interesting to note here. Another interesting note is that the VIX contract, we have rollover this week, Tuesday. So Tuesday we had rollover. Next week, Tuesday going into Wednesday is expiration. And you'll notice here that the volume is split between the February and the March contract. There's also, in relation to the VIX, in relation to its trend, we have two completely different trends when we're thinking about the VIX into the continuous contract. The VIX's continuous contract, which is again February, which will expire next week, Tuesday, is inside of a series of shorts. It is in a downtrend, which is associated with the indices rising. What is fascinating about this setup is that its line in the sand is the 1910. It's a bearish below line in the sand. We have this wedge that's forming on the indices. When you go and you look at the actual individual March contract from the lows of the week to highs of the week, it also defended a Monday support level. These lows that you see down here at this 1910, all of these lows have been associated with this swing highs on the ES this week, with the swing highs on the ES this week. So these are the equivalent swing highs that we have in this very choppy kind of sideways price action. Those VIX lows have been associated with these VIX highs. And so what we have been speculating about here as we're going into our morning in this choppy sideways price action is the result of that next swing low on the VIX. Should it defend above its 1910? But what's fascinating is that the February contract has a bearish below 1910, and then the new March contract is actually a bullish above 1910. And that makes it an incredible pivot from the perspective of our markets being in a bullish above and bearish below line in the sand. Knowing that if the VIX holds above those 1910s in the February contract, the indices still have a potential of falling back down into a support level, and above the 1910s, or below the 1910s, I should say, then there is a potential for a rally. We're also bringing in gap fill statistics here as we're going into our morning. Gap fill stats for Thursday are 64% over the last 180 days. As you can see here, it is not a very high probability day like we have on Tuesdays and Wednesdays. We were in the 40 points above the gap fill yesterday, and we still... This stream continues at emoneyaddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.